Hi, welcome to Oxford Business Tutor, and I'm George Black-Nicholas, and today I want to talk about why the share price matters. In previous videos we've looked at shareholders and we've looked at share prices and why they change, but today finally I just want to finish it off and I want to talk about why that share price matters so damn much. Well, the first person it really matters to is clearly the shareholder. Yeah, the shareholder is the person that's invested this money, and they've not really invested this money for no reason. They wanted to see a return on the money. You've always got to be conscious of the opportunity cost of that money. As an investor, I could have put that money into a house, I could have put that money in a bank, I could have speculated on gold, I could have done a whole number of things with it, but I chose to buy a share. I was conscious of the risk. I know that prices can go up as well as down, but even though I was conscious of the risk, I still took the risk, and now I want to make a return. Hopefully my return will be better than something that I could have done in a bank. Otherwise, I should just go and put my money in a bank because it's risk-free. But I took a risk in search of higher reward. So the share price matters to me because I want to make that money. I'm conscious of the opportunity cost of all the things I could have done with my money, but I really wanted to invest in a share because I wanted to make more money out of the original money that I invested. So that's the shareholder. But we kind of have this impression of shareholders are all, speculators on the stock market, and they're the guys you see on the Wall Street floor, poking each other in the chest and whatever. But that's not necessarily true, and it's not true that it's some geeky kid in front of a computer who's buying and selling shares off a spreadsheet either. I mean, who are shareholders? Loads of people are shareholders. You might be a shareholder. I'm a shareholder. My parents are shareholders. Most of my friends are shareholders. But we're shareholders maybe from different angles. And what I mean by that is maybe I did buy shares in a particular company, and I actually, engaged the services of a broker, and that broker then bought me the shares in the stock market, and I'm watching those share prices on my phone every single day. Maybe that is me, but maybe it's not. There are lots of people who have shares for a lot of other reasons. One of the reasons is that they might have their money in a particular savings account in a bank. Yeah, and that bank account tracks what we call the stock price. Okay, so it actually invests into 50, maybe 100 different companies that are all on the same stock exchange. And the reason for doing that is even if one or two companies or even a few more companies do badly, you're expecting that the other companies in the stock market will, on average, the aggregate movement of share prices will be upwards and probably outperform whatever interest rate you could have got at a bank. Those are called tracker funds, and a lot of people have their money in tracker funds because, as I say, they're looking to get a greater return than just putting their money into a very low-paying current account with the bank. On the other hand, it might be with my pension. Okay, as a young sort of A-level student, you might not be too sure what a pension is at the moment, but let me tell you, okay, by the time you hit my age, pensions are quite a big deal. So a pension is basically a big pot of money that I pay into every month. I don't ever see that money. It's already taken out of my income, my paycheck every month, so I don't even see it. But basically it gets put into this pot of money. That pot of money is managed by somebody called a fund manager, for very high net worth individuals, not like me. It might even be called a hedge fund, yeah. And they're managing that money by investing into things like shares. And again, these guys are trying to pick the best shares, or what they consider to be the best shares that will have the greatest movement in share price over the period of time that I'm holding a pension, which might be 20 or 30 years. So they might be buying and selling in and out of different shares all the time. Now me, as somebody who holds that pension, I'll never know on a day-to-day basis what shares I own and what shares I don't own. Yeah, there's somebody else has my money. They're doing all the trading on my behalf. As long as I see the numbers move in an upwards direction at the end of the year, I suppose I don't really care what shares they're investing into, what companies they're investing into. I just want to see the share price move upwards. So again, as a shareholder, I really, really want to see share prices move up. But it's not just because of the short-term aims. My future rests on this. Yeah, my retirement rests on this. If my pension goes up and it goes up quickly, then I could potentially retire earlier. And wouldn't that be nice? On the other hand, if my fund manager does a terrible job and invests in lots of terrible shares that fall badly, then that means my money that I've saved up for my retirement is going to plummet, and I might have to work till I'm 83 and I'm old and decrepit, and then I might never retire at all. So I'm very, very as a shareholder, my primary aim is for my fund manager to make me as much profit as possible. Again, I'm a shareholder, I'm a profit maximizer. Other people that care about share prices? Well, managers. Managers of businesses will care about share prices. Maybe one from an ego point of view, but then two from a slightly different point of view. They might be a shareholder themselves. Yeah, they might be paid in shares. There's plenty of people, plenty of top managers at least out there that are being paid a share, as a kind of incentive for them to work harder, because they know the harder they work, the more profit the business is likely to make. And if the business is making profit, the share price, or wrong, the price of the shares that they're being paid in is going to go up. So effectively, they're increasing their income by working harder. Okay, but even if a manager isn't paid by shares, or doesn't have a massive ego, the one reason he might want to see the share price increase is because that's what shareholders, and remember, shareholders are owners, that's what shareholders want, okay? And he is basically, he's being employed by them. If he does a terrible job, they're going to fire him. What are they using to assess his performance? Well, I bet you 99 times out of 100, they're using the share price. Yeah, if you go to those AGMs, what the people, the bottom line is what's happening with the share price. You might be the best manager in the world. Your employees might absolutely love you, or I don't know, you might be doing something extra specially superb when it comes to the local village, or wherever it is, the local city where your business has got its HQ. This is all great PR and everything, but I tell you what, if you go into that AGM, and the share price has gone down, you better be strapped in with your bulletproof vest, because you are going to get pelters from your shareholders, and you might even find that you don't last the course, because if you're not making money for them, they might fire you. The last one then is that, not the last one, but the next one is the step down from that. It's the employees. And again, even if you're not a manager, maybe if you're a low-level employee in an organization, you might still be paid in shares. There's a really good example with the John Lewis company that still pays all of its employees some sort of share bonus, okay? It's a good case study that lots of people use lots of times, so I'll let you go and have a look at that. But again, they might be shareholders. So again, the harder they work, the idea is the more profit they make for the company, the more share price goes up, and therefore they are themselves increasing their incomes. But similarly, coming back to it, share price is somehow is probably how they're being judged. But more importantly for them, all right, if the share price goes down, that's an indicator that the business isn't going too well. It's an indicator that, well, maybe if business isn't going well, we need to cut some costs. If we've got to make this profit somehow, and the revenues are stagnating, or that we're losing sales, well, the only other way you can make profit is to downsize. And that means cutting labor, I'm afraid. So these employees are worried about the share price because their jobs are on the line. Yeah, they may well find that they get the sack if the share price goes down too much, because somebody somewhere has got to find profit out of this business. And if it ain't going to be from increasing revenues, then it may well be from cutting those jobs from the shop floor workers. Another one there that might care are the banks. Okay, businesses are always going back and forth to banks in order to secure more investment, or to secure some sort of renegotiation on existing loans. Well, guess what? Banks are looking at companies' share prices and figuring out, well, is this business doing well? Is this business not doing well? The share price, again, is a very, very good indicator for a bank of how much profit this company is making. And then obviously from the self-interested point of view on the bank, how likely it is that this business is going to repay those loans. Is this a risky loan for a bank, or is this a guarantee loan? In which case, the bank's going to give you, if the share price is going up and you're saying, I want some more money because I want to expand, the bank will go, yeah, you're clearly making profit, you're clearly doing well, take the money, have it, and we'll give you a really low rate of interest to boot. Yeah, but if your share price is tanking and you're going to the bank to take more money, well, they're not thinking you're doing this for growth. They'll be thinking, well, why does he want more money when the business is clearly doing well? Am I giving him a loan so he can pay back another loan? This sounds like a risky deal to me. I think I'll step away from this. So actually the banks care as well. Finally, the last thing I wanted to touch on was governments, and not just perhaps governments, but just economic commentators of all sorts. Why do we care about the share price? Well, the share price is a very good indicator of things that are happening in the economy. And one of the things that share prices does in the economy is it's something called the wealth effect. If share prices go up, there's so many of us that have some of our money trapped in, well, not trapped, invested in shares, that actually when we see the share price go up, even though we're still in our same job and we get the same income, we see this asset that we own increase in value. It's about the same as like if house prices go up. Yeah, I have a house, I haven't changed the house, I have the same job, everything is the same. But if I know my house prices go up, then suddenly I feel richer. Yeah, it's called the wealth effect. And the same thing with shares. If you know that the newspapers are talking about how share prices are going up and it's a real boom time, suddenly I know, well, I've got some shares, I've got some tracker funds, I've got a pension, so this is clearly all doing really well at the moment. This is worth a lot of money, all right. Well, some of the things you might start doing then is changing your spending behavior. Yeah, as a customer, I might think, well, if I've got more money kind of in the bank in my shares, then actually maybe I'll go and buy that car, because I was kind of umming and ahhing about whether I should buy that car, and I was thinking, did I have enough money from my wages? But actually, even though my wages are the same now, I can probably afford it because I know I've got that money tied up. I know that my shares are worth a particular amount of money. So you might see things like expenditure going up. So share price is a really good indicator of where the economy is going, and if share prices go up, you can damn well expect that the economy is going to go up as well in some sort of virtuous cycle. Because share prices are going up, people are spending even more. That'll generate more profits for businesses, and share prices should go up even more. How brilliant. And then the opposite's true similarly. Yeah, if we all know that share prices are tanking because businesses are doing badly, profits are going down, therefore share prices are going badly, then as somebody who has money wrapped up in shares, I'm thinking, oh God, I've lost my money. I've lost some of my money. Yeah, I might not have lost everything, but I might have lost a whole heap. And if you come back to what I was saying before about pensions, I'm kind of looking at that thinking, wow, okay, my life vision has suddenly disappeared before my eyes. Okay, so that car that I was umming and ahhing about, I can't afford to buy it now. And it's strange how we use that terminology, I can't afford. Well, I had exactly the same income that I had before, but because in my head my share prices are worth less, I don't want to take the risk of spending all my income now because I've got less of a safety net behind me. So when share prices go down, okay, that's a very good indication that people are going to start saving more and start spending less. And actually, again, that creates a vicious cycle, because if that's what people are thinking, then that's what will happen. Yeah, people will act like that, and therefore the economy will go down into a downward spiral and potentially even into a recession, if it hasn't happened already. So share prices really matter. They matter to a lot of people and in a lot of different ways. So I think it's a really interesting way to start up a business studies course, which is talking about shareholders, share prices, what moves share prices, but why do they matter? Why do we get so fixated on them? Because we do, yeah. Business studies teachers, business studies commentators, we all get fixated on the share price because they're so central to so many different things and they matter to so many different people in so many other ways. Okay, that's it. Good luck.